Hey everybody, still here for the daily market pulse. So stocks rise once again. They bounce back after yesterday's selling in high volume. Today in mixed volume, however, so everything still looks good on the bullish side. Buying on dips, at least for now, it appears to be okay and perfectly fine. So let's look at charts. There is the Dow bouncing off the 20-day moving average right to the 8 moving average. So kind of stuck between, but also right below the 17,000 mark of the big time psychological level. Bollinger Bands are still tight, so we're still looking for a pretty sharp move in one direction or another, likely to the upside. Same thing here with the S&P off the 8 moving average with movement or at least room still to 1970 plus. All the way to 2000 is the ultimate goal that we're still looking for, or support immediately below the 20 as well as down to 1920, 1925 area. There's the NASDAQ, beautiful move there, a gap lower on the open at the 8th, and then the pivot area 43.50 essentially, boom, takes off. Closes higher through the doji, through yesterday's open, etc. Not making a new high yet, but the Bollinger Bands are at least showing signs of life and opening, so there's still room in this case to 4,400 to 4,450 on the upside. TSX, after the sell-off following the three consecutive doji formations, bounced back just mildly. Is still looking for possibly pull back to that 20-day moving average. That could still happen. It's not quite oversold yet, so I'm looking for that to move in that direction, at least initially. The U.S. dollar, Canadian dollar stabilized yesterday, but looking for more toward the 107. It didn't quite make it there, so it may still want to swipe at the 107, possibly lower, but 107 is the first area and goal for starters. So then we have the euro relative to the US dollar still going up. We had it kind of consolidating across 136. The moving average is included, looking for room to 136.50 and then 137 in that direction. The odd thing with the markets up, the treasuries were also up, but we also said the 137 could be a target, and sure enough, it swiped right at it. It was literally 2 ticks shy of 137 as a high. Bollinger Band's still tightening, so there's still room to go swipe and reswipe at 137 once again. If it closes through there moderately, then you're looking at 138 and 139 on the upside, but I'm thinking 137 might be it, and then the markets continue higher. We'll see if that's the case or not. Kind of weird that they're going in the same direction at the same time. Japanese yen, after pulling back into the 50 and the 8 moving average, bounced back again, consolidating a little flag-like formation, still looking for a push into 99 on the upside. Gold had its huge move last week, consolidating sideways right here under about 1320, 1325 with room to 1335 at the moment. Silver kind of the same thing, except actually a little bit more aggressive. The gold is quite a bit above the 200, mind you, but it just cleared the 200 as you see. But look at the new high at 2120 with room to 2150 and 22 in particular on silver, with the 200-day moving average and 2050 approximately being the support level. Oil, after the couple of doji formations, high wave doji, thought we might get down to 104.50, 105, where the 20-day moving averages as well as the pivot did not quite get there. Bounced back up with a gap higher and a dark cloud cover on Monday. Faded quite a bit yesterday, but bounced back and forth with somewhat of an undecided candle today. Holding the 8 moving average primarily, but I'm thinking the way this is looking right now, there's a fair amount of rejection at 107.50 that this may come back still to 105, 104.50, but right now it's fairly neutral the last several days, not doing a whole lot of anything. Small caps, the IWM Russell 2000 equivalent, gap lower on the open right into support 116 and bounce back aggressively. So I really like this reversal, closing above the 8 moving average and looking for 118, 119 and higher, ultimately 121 as a target. The VIX in this case faded. That should be right. Yeah, that faded, gapped up a little bit into the trend line, into the 50, and then faded back down toward 1150, essentially looking for a possible 11 retest, 1050 retest in this case.